Hello, good morning and good afternoon, good evening to you all, wherever you are joining me at this moment. Welcome to 271 edition of Investdata Trading Academy live with Ambrose. The market on international scene continue on a mixed trend as fear of no debt stealing no default of US continue to rattle the market. But the good thing again is that market is losing focus from this no um, deadlock between the government of the Biden and the SA Congress, the Speaker, as they've yet to arrive, but focus are moving now toward to the minutes of the Fed meeting to see if the Pakistan will continue or the time for them to start what easing. These are the what is also looking at this point in the matured market, and I will tell you that the market across the globe, as I said earlier, they all kind of flew back as a result of the fear of US possibility of defaulting all the gain recorded on Monday and early Tuesday. I will tell you at the end of Tuesday trading, we saw that these gains had also moved in the southward because of the fear of debt stealing that remain reached by what by the Congress and the Biden administration. These are the things that is also shaking the market. And like I said earlier, focus are now moving toward to the at what likely minute to have come today, later today from the Fed committee. These are what is driving the market as we speak. I will tell you that the U.S. market is not left out for what is happening in the market as we speak now, and that trend has continued in that domain. And also, I will tell you also that the number that are coming from the companies around that zone are not looking bad, but because of this possible default, and this is going to affect the economy, global economy generally. If at the end of the day, there's a but I see from my own side that the way the binding administration is working with the or trying to meet with the Congress and the other leaders, I believe that the possibility of not defaulting is very high, and they will adjust upward. As we speak now, this fear of possibility of unprecedented default already sending panic across the globe, not just only in US, because whatever happens in terms of this debt default is going to affect all the economy, because it means that the government of US will default in most of their payment that will be due. And don't forget that June 1st is around the corner. It's less than six days now to that 1st of June. I believe that this is why many investors across the globe are worried. And for me, it's not a new thing. You see, where you have a two-party system, the amount of reward, disagreement, and but at the end of the day, for the interest of the people of the or that that state, that US, they are likely also to come to agreement. The Republicans are not moving ground. Democrats are also in their own trying to agree to. But I believe that before these days allow something reasonable to happen, I believe that there's still windows appear. There's still enough window to discuss before that. No, that January June 1st, sorry. But the secretary, the Treasury Secretary has continued to highlight that this will spare room for the government if they fail to, because that also locking a lot of things that might also affect the capital market, the stock market, and every other segment, because this is what I tell you all eyes are on now. But speak now, US market, Dan Jones has also set a sign of kind of a pullback. Can see that the index is also looking back. Also, Nasdaq and S&P are not left out of it. They are pulling back already as we speak now. Why in Asia market we have seen that Asia market also we have seen a lot of the indicators there or indices there are looking red. And don't forget that I said earlier yesterday that because of China recovering is still weak, we are seeing all this playing out again in that region. But I will tell you that oil price rebounded almost trade to get around 77.77 dollar per barrel as a result of sudden the inventory draw. You saw that the US have been buying up, and also the fear that OPEC also might likely also cut supply or cut output is also what's also impacting price. But this no, have not done much on inflation at the figure that was released for April for most of the company, most of the countries, sorry, in that Western world have shown a what have shown a kind of slowdown in inflation. We saw the inflation data that came from UK. We saw that from 2 digit to one now about 8.7, and also IMF have also reported or kind of signal that UK might not go into recession again this year, and that means if it's sustained, we might see that. But then this also a relief for what for the eurozone. Despite that, the global service or what we call potential manager index is still weak for global, and this has a lot of what high interest rate by central banks of these different domain to fight what to fight inflation. It's already reflecting in most of the Western economy, and also outside there we are seeing this thing telling on what on the economy, on the economic productivity, and that also call for caution for investors to look at this rise we are seeing in inflation and cost of cost of fund around this economy, which sectors or which industry will benefit from it. And that is why it is good for you and I to always know how we put our portfolio, how we kind of rebalance or realign our portfolio to those sectors that will still have potential to maintain the figure they are posting today, that at the end of the day these numbers will support what the price. I can tell you that price feed on what on earnings, and if earnings are positive, you are able to see that this companies the share price of this company will continue to look up because of what? Because the earnings support a high payout, and also it also boosts the company what fundamental, because earnings shows you how effective, how efficient, and how progression or progressive the company is. No matter who is managing that company, whether a black or a white man, if at the end of the day they are not posting positive number that will support their price, I will tell you the price of that stock will remain low. And that's also what advice investors should be very careful. Not all high dividend yields you are seeing, dividend yield you see that are also applicable, because most people have entered into moribund company because they saw high yield in the company. You want to look at why is the company having a high yield. Is it because the price is going down, or is because the earnings is going down and price is going down, and that will make the you have to see look for company that you see they are making progress in their earnings, and that's also reducing their pay ratio at the same time, because they are high payout because of they are making positive earnings. That is why you should consider what a high dividend yield. Not high dividend because prices are low, prices are coming down, and because prices are coming down, the earnings will continue to make it look like that. And also dividend payout because it's dividend payout for the price, and if price is coming down for bad performance and it's making the yield to go up, that is a one chance dividend yield that will kind of trap you, will kind of trap you in that investment, because price is going down, and because price the yield will be going up. You need to understand where is the company at that particular time, so that you're able to make what informed decision. And these are the things that you need to know as what as investor at any given time, so that you make the right investment decision that will help you to know exactly what is happening in that domain. Good thing that also we're seeing that the tech industry there, okay, we're seeing that the result that came from one of them was not too good, and also because of what is happening, the tech index is also looking not too good at this moment. But also we're seeing that the earnings that came from one sporting company in that US showed that the earnings were positive, and despite that the earnings were positive, because of the negative sentiment as towards the debt ceiling and most likely default, because of the lawmakers and the executive are still dialing here up and down, not moving that. That's also affect. That's why the positive earnings. That is why you need to see where is the end, where is the chart telling you is there positive sentiment. That's why I said no matter what you are trading, keep your eyes on the chart, because that is very very important for any one of us. If you really want to make sure that you invest wisely, you want to look at your chart at any given time, so that you also protect your investment. And at any given time, you must have your stop loss. Like I always say, I didn't start with it today. You must have your stop loss, have your buy range, have your profit target, and also know how to take profits when the market moves in your favor. Don't fall in love with the up market at any given time. Like I said earlier, that Asia market, we saw that at this morning, this Wednesday, we saw that the market there have retreated down, tracking a loss in US stock. As the deal I said earlier, I've also feeling it still just remain out of reach as to speak. These are the things that are also worsening that market. And as I told you, like I said that China also is not helping matter because their economic recovery has not been too strong, and that's also that environment we are seeing that the indices there are still also mixed, but most of them are in red. They are being weighed down as we speak as a result of the comment between no, the comment also by even by President Joe Biden, in their last meeting with the G7, that yes, in that meeting have about almost more than 15 that meeting with China. They want to extend the relation with China, but also they signed an agreement with Taiwan. This are also what also people are looking at. Also, there are some some tech industry from China, from US that also been suspended in China. Who believe that all these are playing out in that market. But I told you earlier that the relatively oil price we have seen in the global market has supported most of these Western countries to post a positive what's it called, inflation figure, or looking down, not positive because some of them are still high, but slowing down is bad. But if oil price will go above 80 again, we might see a return. That is why most of these central banks are still very careful, and that's why all eyes are still on what on Fed minutes today to see where they are going from there. It's very, very important to know that. Yes, before we go to the chart, I want to quickly look at what is the market properly doing, and also the result that came to the market yesterday. I want to look at it and see what is this result look like, and these sectors that we are seeing this result are coming from. What is the end for this sector? For me, I would say that we are seeing a kind of a positive sentiment for the insurance company, and that tells me that there are some potential in that sector, especially since the regulators as it also increase the premium. Not only that, don't forget that for the past 3 years they've been under consolidation. Most of these insurance companies are consolidated. They are bigger and stronger now, and now most of them instead of Nigerians taking their insurance outside the shop Nigeria, many Nigerian insurance companies can take this insurance, cover this risk and all those stuff. For me, I see potential in that industry, and most of the numbers that are coming from this sector insurance are looking good, especially their Q1. And if you look back to their full year 2022, you have seen that most of them are paid dividend even at 33 kobo, but we saw some of them paying 6 kobo, 7 kobo, and 15 kobo. And not that if you have seen the figure that the last is paying 15 kobo no dividend, followed by we saw a lot of cornerstone around the 6 kobo, and others were paying 3 kobo, like a life of ICO and the TPS, which is a home market insurance. We saw a lot of them paying 3 kobo, also some 2 kobo. It depends. For me, it's a good way that they are coming back. That means if you are thinking medium and long, there are some companies in this sector that can start looking at. But if they maintain this earnings we are seeing, that would be good for the industry. Yes, also we can see that the result that came from mutual benefit, yesterday after the market has closed, they released the two related number for the 2022 full year and the first quarter 2023. Yes, in all this, there's no dividend payment. Even their full year results look good. We see an improvement, but there's no dividend payment. Their Q1 is also starting. Yes, not too good, but on a good note. If they can sustain this trend, their Q1, that also support their figures at the end of the year. If you we'll quickly look at the figure for the full year and that of Q1, just in a jiffy, so that we can continue because of our time on our chart. And also, if you look at the figure that were released from mutual benefit assurance for their 2022 financial year, I would say this number is not bad at all. You can see that their gross premium was up by 14% from 29.3 billion to 33.5 billion, in 2022, and that also translated to a positive 3.14 billion against a negative a loss position of 5.42 billion in 2021. That translates to 158 growth in terms of change in PAT, good one, and this translates to a positive 15 kobo against negative 36 kobo in 2021. And that also, if you look at the company profit margin for this full year, we're seeing a 9.4% against negative 18.5. You can see that we're seeing that moving towards something that is positive, and that tells you that there's there'll be green light at the end of the tunnel if this trend is not also repeated in 2023, knowing that they come back to profitability in 2022. But if you look at the operating cash flow for this period, I will tell you that we saw a slowdown in the cash flow to around 1.228 billion from 1.81 billion in 2021. This is for what? For the year 2022. I tell you that the full year earning per share now is 15 kobo for that year. But if you look at also that number, I can see that the underwriting profit moved by almost by 88% for that full year, from 4.43 billion to 8.37 billion. You can see, that is that I told you that this premium has a way of kind of impacting this insurance. That you can see where you increase rate or tariff for every organization or any industry, how it play out. Quickly look at what the Q1 look like for this same mutual benefit. Look at the Q1 top line for mutual benefit. The gross premium also moved from 10.99 billion to 12.76 billion. That is 16% up. But the bottom line was flat. Why is it flat? Because it moved from just the PAT moved from 1.65 in 2022 to 1.66, just 1% up in the green. And that added to what 9 kobo earning per share against 8 kobo in 2022. But the good thing that also we are seeing that if you look at the profit margin, it's still above 10%, which is good. 13.01% against 15.01 in 2021. But where I found a little bit, I see some challenges here. Is in the place of the operating cash flow for mutual benefit. I can see that the mutual benefit cash flow are moved forward for a negative negative 1.83 billion from 2.1 2.1 billion in 2022. This is where I have concern, but I believe that going into the future, if they can adjust this with one policy, that would be very nice. For the earning per share for the first quarter is not 9 kobo. You can equally project to see that at the end of the day, we expect to see 45 to 48 kobo earning per share for this company for full year, and that might also trigger them or support their payout at the end of the day. Quick one, let's go back to the market. As we speak, market has maintained a strong momentum, even when today all eyes are what on the outcome of an MPC meeting that is holding as we speak right away, in Abuja, where all eyes are there because we believe that because of inflation is up for the month of April, and not only that, we have seen that even New Zealand yesterday also it hiked their rate right between 25 basic points. It's a thing that have gone across the world that we're seeing 25 basic points across the globe. That that means it's sign of slow down because all started by 75%, 150. We're seeing that gradually. On that note, all eyes that Nigeria will likely see a kind of a slowdown, in rate hike, either to by 50 basic points now down or 25 basic points. Now around the 18.25 or 18.50 is what all eyes are to speak now in the market. But I believe that as the market has maintained this positive trend, market has ignored inflation figure as I did last week. That means market are factor in that. Also this morning, even as all eyes are now on this outcome, I think the market is still remain in the green. Yesterday, we saw market gain almost 0.5% yesterday. This morning, in that mode, market is still in that firing mode as we speak now. That means there is something market is seeing that that is encouraging them. Is it the incoming government? I'll tell you that the confidence the market is displaying this morning, as regard to the next administration, it shows that there is something that is working for this administration that market is just factoring in, and that's telling you that there is something good for the market. As we speak now this morning, market is on the fire. Market is almost there, 170% in the green. You check it now, but I'm going to quickly look at it now so that we can look at what the market is also doing in terms of favor. Yes, if we look at now, market is doing a 52,739. 739. That is what the market is doing right away as we speak now. That tells you that market is almost 118.09 up, represented about 0.18% in the green, which is good. And if you look at market, the market rate is very positive, about almost around 21 to 22 in the green. Just about 13 stocks are in the red right as we speak. This is a good news for the market. And if you look at the top users right now to speak, you can see that tolerance is the one leading the users chart, followed by mutual benefits. Mutual benefits, because there's no dividend of their full year and their first quarter is flat. I can see the market reacting to that. No flat. You can also Sterling Bank and also profit taking. You can see Adova and what and Wapik Insurance. These are the ones that are in green as we speak now. For me, investors should just keep their finger crossed. There's no cause for alarm. But quickly look at the gainer chart. I tell you that we have about 21 to 22 stocks on the green. We are seeing that the University Press is leading this gainer pack at this hour, followed by ROT Briscoe, you can see FTN Coco, C&I Leasing, and Cabaton. These are the ones on the gainer chart. While other blue chips are still there, but the top five are the ones we have just read now. We have just look at now. Then, if you look at in terms of activities volume, no, Access Bank is leading with 33.42 million shares traded, almost 10 around almost 11 naira, 10 naira 90 kobo as we speak now for Access. Also seen as Zenith Bank around 26 naira, 60 kobo, about 25.8 million shares traded so far, followed by GT Code 2740, 24.2 million shares traded. UBA not left behind, 8 naira 70 kobo, 17.1 million share traded. Transcorp trading at 2 naira 95 kobo, 15.9 million share traded. These are in terms of volume. You can see that the market is still very, very strong. For me, it's a good one for us to also to consider. But one thing that we want to go to the chart now to see what the chart is telling us is very, very important that in technical analysis, I say you must look at where is the chart going to see where the market is flowing to. Once you're able to get that, that will help you to know exactly what to do as a trader or investor. If you come to the chart now, market as we speak now, market is still making lower highs, but you can see the market has formed how many tops here? 1, 2, 3 here. And when you see tops, that is top is a sign of what? It's a sign of sell. It says sell at the top and buy at the bottom. And that is why resistance and support level is very, very important for every trader or investor. And T line is what really helps you to know whether T line is acting as a support level or acting as what as a resistance level. Now that we are seeing that the market is forming the support level resistance level here, and I said yesterday that the resistance level as at yesterday is 52,684. As we speak now, market has moved to 52,714. Market has slightly break above it, but sustainability is what we want to check because at this point, if market breaking, will it sustain it? And today, all eyes on the outcome of MPC meeting. And I believe that the market has factored in all this macroeconomic data, even the information that comes from MPC meeting. If you look at what market did after inflation, even as market inflation is coming close, the market maintains strong momentum, positive sentiment. It tells that investors in the market or traders have factored in this activities, especially that all eyes are on the incoming government to come with a policy statement, to come with a blueprint where the economy, what to do in the economy, policy that will drive the economy and put it in a progressive mood. I think these are the confidence of having that new government, new policy. These are what the market is looking at. And also don't forget that the Q1 numbers for the market were positive. And also already, if we are crossing over to the month of June, which is the last month for the quarter, automatically all eyes will be on what? On Q2 number, knowing that the market have experienced a kind of stability in terms of liquidity. After the cash crunch in April and May, we saw also the potency manager for the month of April have positivities. Also, for the month of May, will be coming very month. That for me, these are what investors are looking at. That if companies have done perfectly well, in the first quarter when we have a cash crunch. Now that we are seeing that liquidity have come back, and we are seeing also stability, and also we are seeing relatively stability in terms of exchange rate. These are things that we might see also a better number compared to what we saw in Q1. These are the things that are driving the market now. On that note, there's no cause for alarm at all. And I believe that investors should just relax and traders also take advantage of the up market to cash out their profit and also to buy into companies with stronger volume and stronger trend being identified and go with it immediately. Let's quickly look at call our indicators cost of our time and look at what is the market doing right away. We're calling out our ADS again. Why we're calling it? Because we needed to see that the momentum has changed for good. And if momentum has changed for good, you need also to guide you and I in our decision. And then we'll call up our money flow and ADS and our money flow and our T line. We are good to go from there. Our T line, good. T line, quick one to change it to what? To H. I believe you know why. That for us to can see. As we speak now, let's make this bold so that you can get the film of what I'm saying or picture of what I'm saying here. That the market is above the T line. You can see it now. And then this they tell you that the market is strong. You can see that market has come above the trend line. Yesterday performance, you can see this morning again. You can see that market has broken out that resistance level here, 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 here. You can see it now up again. But also now the market break out the 50 days moving average, and that will be a golden cross if market break that given average. And that is that once market cross the 50 days moving average, it's a sign that also institutional investors are gradually entering the market, because that is their what, that is their also the moving average for institutional investor. But I look at this point after yesterday, it's acting as a resistance level. But if at the end of today's trading, we see that the market will break out this 50 days moving average, that is called golden cross, and that will be very nice for the market for us to also look at as we are taking our investment decision. Yes, if you look at this market now, it's still positive. You can see that the trend is still up. And if you come down here and look at your what, your ADS for me, no, we're seeing that the positive cross here, but is still very tiny. The blue one across the red one fine, but ADS for me is still above, is still below 20. It will have to be above 20 for us to say yes, it's strong. No, the momentum is strong. And also we consider it slowed down from 83 or so yesterday in the money flow to 82.34 or 39. Now it's a slow one, very flat. But in all, market is very strong. So there's no cause for alarm at all. We need to understand and see where the market will go from here at the end of the day. But I believe that once the MPC meeting outcome comes out, we're going to see how the market will continue tomorrow. And also don't forget that the March account are still in view. We have seen the unaudited account for a few of them, and also waiting to by the end of this end of this month. We're going to see those that are yet to release their 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 unaudited account, to release their audited account, especially from Flower May, Honeywell, and what and Northern Nigeria. You can see that what is happening already in the life of University Press. On this note, we can look at some few stocks that we can now look at to see how they are performing. Like I mentioned, let's look at what is happening to this UPL. Let's look at what's happening to UPL. How far will it go from here? Want to see what is happening to UPL. How far will it go from here? Once able to get that, it will go a long way for us to take decision. If you are there, are we taking profit at this point? You can look at on a day chart, you can see a stronger bullish candlestick here above the T line. A good one on a good volume. You can see that is strong, and you can see the ADS is trading very strong position for me now. Yes, it's still low, but you can see that the blue one, can see that how low it is just here. You can see that the distance here is very small, but as it's going up now, we're likely to see it coming up gradually. And for me, it's a positive one for the stock. But don't be carried away, on this stock if you are in profit, because you have set a target for yourself. Because the next resistance level at this stock is around the 2 naira, 48 kobo. That is where we're looking at to see what we can do from there. To speak now, I've seen that stock already around the 2 naira to 5 kobo right now. Once able to break out, sorry, this point around the 240, like I said it earlier, 240 at the resistance. Once able to see there, the stock might likely also start coming down for me. You know how to take your profit at this point from this kind of stock. We quickly look at what is happening in Cabri and PZ. Go to look at what is happening in Cabri and PZ now, so that you can easily know what to do with that position if you are in those stock right away. Cabri. Can see that capital have slowed down. Can see even though it's around to like profit taking at on that stock. Can see that your ADS start looking down. Can see even that ADS is been around almost 54, but it started looking down already. And this on a daily chart. We can look at what is happening on this chart on a weekly chart so that you can get a full gist of it. Because when you see stock forming, you can see here to here, you can see that it's almost form a double top. But you see that double top, the time for it to sell, and that is why it slowed down. But I believe that once it pull back and bounce back again and surpass this this level, this resistance level, that will be a new trend. But good thing that money flow is still strong in this stock. 88 above 50, that is for me too strong. But always say that the momentum ADS is still leading around even below 20 again as to speak. Once it's above that 20, that will not say that ADS is still very strong, and now it's still very low. Let's keep our finger crossed in this top up. before we call it a day, let's look at PZ and see what we can make from PZ, and also what investor can also take from it. We are seeing that the banking stocks are still on the fire, but look at them tomorrow. But then look at PZ now right away, because I have my time is fast spent. Always have 2 minutes here to look at this stuff. You can see that we're seeing that on a weekly chart, it look good for PZ, but let's take it down to 15-minute chart before I look at that one. That will give us a clear picture of what is happening already. There's already a sign of profit taken already in the chart. You can see it here on the 15-minute chart, and that is not too good. People are taking profit. Either a pullback will create opportunity for that to enter. But despite that, pulling back is still relatively above the T line on 15-minute chart. But we'll go back to see a day chart and look at also on a 1 hour chart. On a day chart, you can see that that pullback there, but trying to resist the decline. You can see that pullback already there. You can see it's on a sell already. People are taking profit. You can see it down. Money flow is already looking down. But quickly look at 1 hour chart before we call it a day. On 1 hour chart, the stock try to rebound after pulling back in the last 2 hours. Try to rebound now, but still already seen a sign that the bull is slowing down and bear trying to take upper hand at this point. Money flow is within almost 62 above on the 1 hour chart. These are the things I need to consider before you can take a decision. But for me, for those in these stocks, I think it's due for you to take profit and also see where another opportunity for you to come back. Taking profit does not mean that you are going against the market. It's part of the market that as a trader investor, profit taking is part and parcel of the market at any time. That means when you see the opportunity to take it, take it. Yes, on this point, I say thank you for your time. See you tomorrow by God's grace. Bye. Enjoy the rest of your trading day. Bye.